Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good afternoon, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, the 16th of April, 2018, about 4:43 p.m. Central Daylight Time. A good update today. I wonder if an up Monday brings a reversal on Tuesday, that common word that I often bring up. You went up in the metals, but you labored. You didn't really run. I can't say that they did poorly, but it was more of a reaction day to the Syrian event over the weekend than it was anything else. Dollar down, euro up, most currencies up against the dollar. Notice how crude got hit pretty good today along with gasoline. When I looked at the bonds and notes, I can see that you've got a small rally in the bonds, slight decline in the notes. So let's take a look at where we're at on the weekly area chart of closes. As I've said, you have what's called an upthrust because if you look at the pattern, and remember, this is closes only on a weekly basis. So today's price isn't the close of this week, but it's the last price of the current week we're in. And you've got the higher highs, higher lows. What's bothered me all along here is you're staying under the 18-week moving average of closes, which means the bias is down. So even though the market and price is coming up, I see good resistance in this market near the 27.14 level. When I take a look at the current chart pattern, you can almost visualize a trend line coming up there. You wouldn't want to see much of a break in this market. It could put this rally at risk. It's been a labored rally. Nice that it's occurred, no question about that. Is it trending is the first question. When I put the swing line on it, certainly is. Higher lows, higher highs. Now this is a chart without that swing line. And when you put it on, you get to see, because what the swing line does is it looks at the previous day and decides, via the formula that I put into the indicator when I wrote it, whether you should draw the line to the day's high or the day's low. It's always going to go to one of the two. And as long as the pattern's up, you're in what we call, at least at that moment on the swing line, an uptrend. What else? It tells you the risk associated with the trend. You closed at 2681. 75. You don't want to get under 26.26. That will break that chart pattern. Then I look at the 18-day average of closes. Now remember on the other chart, the weekly, we saw that market was still with negative bias. This has upside bias. It has been over the 18-day average of closes. The swing line is up. So I look to see, is there any overhead resistance? One number that's very clear is 2702, let's call it 50, the 100-day moving average of closes. I next look to see on the chart, where are Bollinger Bands? Now, Bollinger Bands are an algorithm designed to give you an idea of immediate resistance or support in the market. Can you go through it? Of course you can go through it. I mean, there's nothing that says you have to pay attention, but if you go back on your chart, you're going to see more times than not, even when you got through it, you turned. This dark line that I've got right here in thicker area that I'm drawing, that's the 200-day moving average of closes. So what I have is the Bollinger Band down here, but I'm more concerned with this. I'm seeing now that the Bollinger Band and the 100-day average are really coming together. When the market reopens tonight, they'll probably be right on top of each other, and that should be the resistance point. What you don't want to do is take out 26.26. Is the market overbought or oversold? Well, when I look at my slow stochastic indicator, it's overbought. So let me explain how I interpret the chart, and that's all it is. I see the uptrend. I see the bias up. Momentum has been up, and the market got itself overbought, and there's strong resistance in this 2703 area. When I look at the NASDAQ is not quite as overbought. In fact, is it even overbought? No, it's not overbought at all. It takes a number in the slow stochastic to be over 70 on my definition of overbought. So if we come back here and we look at the S&P, you've got a number of 85, so it's pretty clear it's overbought, at least my interpretation. This still has upside momentum. The 100-day average has been the battleground. It has tried to break back, and each time it has, it's found support at the 18-day average. If the market can thrust forward, then you're looking maybe at the upper Bollinger Band. Support back at 65.98.5, and you don't want to take out 64.08.5. Also, notice how the Bollinger Bands are rushing in at the market. This market, as it's been grinding itself higher, isn't getting away from the resistance point. And if you take a look at the Dow, and I'm going to back off a few days so you can see this, and you'll see what I'm talking. Here you get, and this was last Thursday, here's the 100-day average of closes and the upper Bollinger Band. I'm showing them because even though this market's in an uptrend, I think a clear uptrend, I am looking for an area of resistance up there. If one were long, maybe that's where some longs are coming out of the market. Market grinds itself higher on Friday. Today, April 16th, the market works a little higher, but it didn't get up to the 2476 or 24,808 level. It's still pretty far from it, and you are overbought. If the market were to break hard, first supports the 18-day average. If that gave ground, here you've got a combination in these two numbers of the 100-day average, I'm sorry, the 200-day average, that's the 200, and the Bollinger Band together. So I'd say that on any hard break, 23,500 is an important zone in the market. I'm not saying it's going there. I'm saying ifs. These are all what ifs. When you look at the Russell, first thing my eye goes to, and this is how I teach in my charting course, why waste time on the chart if it's overbought? That's how fast I'm through. But for you, overbought, higher lows, higher highs, support the 100-day average. If it gives ground, you break the pattern of higher lows, because to get under this 1546, once you do that, you'd have a higher high and a lower low, overbought condition, back to the 18-day average. So if you continue up, I'm not looking for much more than the 1580 level. In the VIX, you've worked yourself down with the pattern of lower highs, lower lows, under the 18-day average now for 4 days, where you've hit the downside target finally of the lower Bollinger Band. Maybe you get to the 100-day average. But seeing this market oversold, the other markets overbought, the Syrian event over, I just wonder, is Tuesday a reversal day in the market? When I'm looking at the T-bond market, it managed to rally back nicely to the 18-day average of closes. What the bears don't want to see, in my opinion, is taking out 145.25. As long as that's not done, you have a pattern of lower highs, lower lows. The bears just made their stand today at the 18-day average. If the market starts taking these lows out, I would be very not surprised to see wherever that lower Bollinger Band comes in, the market make a run there. If you get over 145.25, can you turn bullish? No. You'd have a lower low and a higher high. Got it? Let's assume that I'm totally wrong on everything. Where's resistance? Probably the combination right here of 147.2 to 147.11, the 100-day average in the upper Bollinger Band. 10-year note. First thing my eye goes to is you're oversold as can be. The market tried to extend the break this week, didn't get very far on it, from lower highs, lower lows, and this whole thing began right here. I always love to show this. This is an outside day up. This occurred on Wednesday, the 11th. When you have an outside day up, as I did my research, remember, I've done this over nearly 5 decades. As life goes on, you start seeing patterns. What I learned is that if you take out the low of an outside day up, it's often what I call a bull trap. You catch the people in here, and the market tries to work lower. Does it always work? I don't know anything on a chart that always works. I'm sure some of you have that. I don't. I've gone back and I've done the research. I'm more comfortable with high probabilities. That's all that you can say. So if you take that out, the one thing I know is I don't want to go back up through that high and find out that you're on the wrong side. But now you've taken that out, so now you've got lower highs, lower lows, momentum down, bias down because you're under the 18-day average. Maybe you get to the lower Bollinger Band. Here's the market on Friday, and here it is today, and it seems to be falling short of that in an oversold condition. I would be not surprised at all to see short covering come in. Markets don't have to go to lower Bollinger Bands. They'll make a run, and you see if they're overbought or oversold. You don't need the last penny in a market. In the dollar index, I see the market having thrown out let me say that right. Bear signals, not sell signals. Lower highs, lower lows, downtrend. Under the 18-day average of closes, bearish bias. Momentum pointing down, bearish. So if the bears are in control and they're selling, that's where my brain was going, I'm imagining they're defending themselves at that 18-day average, and what they don't want to get are prices over 89.67.5, because that could be a trap for them. That could be one of these things where you just don't go anywhere in a sideways action in those Bollinger Bands, and it's the flip-flop in the eurocurrency. You have higher lows, higher highs, bullish. The market closed over the 18-day average, bullish bias. Momentum pointing up, not overbought. If the market makes a run higher, a potential might be the resistance of the upper Bollinger Band. But what don't you want to happen? If you're bullish, you don't want to see last week's 123.56 taken out, and in the dollar, you don't want to see taken out to the upside 89.67.5. These markets are just flip-flops of each other. In the British pound, a nice day where it's trying to break out of the upper Bollinger Band. Often when that occurs, the market gets overbought very fast, and that's where you're at. Now, each time recently it's gotten over the upper Bollinger Band or under it, it's reversed rather smartly. So I'd be a bit cautious right here. The market trend to the upside. Where do you think this began? On an outside day down. Once you took out that day's high, my goal is to not take out that low again, and maybe you get to the upper Bollinger Band. You tell me. I'm comfortable that that's where I think the pros are taking some money off the table. I don't see anything bearish about the chart, but that's what I'm seeing there. In the Japanese yen, some short covering came into the market late. It'll be interesting tonight when it reopens. Do you lose the embedded reading? Now, that happens when the number 18 gets over 20. Do you see how the two numbers that make up the slow stochastic have stayed under 20 for days in a row now? If you get over 20 often, markets try to put price and the 18-day average of closes together. Does it mean it's wrong to be short? Not until you lose that. So the bears have control until that's lost, and I think that's the most important part of this chart. If the market continues down, two levels of support come in at 92.92, 92.25, resistance back at the 18-day average of closes. Bitcoin. While it was down slightly, I am not surprised by this action. I think tax day was a big event, and that's tomorrow, as you know. I think everybody that had to do whatever they had to do to get their taxes filed, extensions, it's done. Tax selling might be done. This is an important area in this chart. Is this the end of the correction to the downside is what you're going to hear people talking about. I don't know. I can tell you that right now you have a pattern of higher lows, certainly higher highs. Momentum is up, as you can see, and the bias is up. Support back at 75.63. The risk is monstrous. It's back to 66.60 as a low. So, you know, it's nice to look at the chart, but that's a heck of a lot of risk. In Brent versus WTI crude, as you can see on Friday, you went to 5.25, and you came back up a bit today to 5.38. So is this 5.20 area or so going to be the support? Hard to see, but I can tell you the thrust of the market changed right here when you got over that 18-day moving average of closes. Again, I use that as a filter often on closing prices to see where's the bias of this market going. In terms of the Brent by itself, first, overbought as can be. Second, now it's spent a bunch of days at this upper Bollinger Band. It lost a piece of bull news today. What did it lose? The Syrian event's over and nothing happened. Nothing in terms of Mideast oil being cut off. So if you take out 71.10, you got to be a bit cautious here that with momentum starting to turn down, maybe it's saying price and the 18-day average want to come together. In the crude here, the WTI, you have an outside day down. Duh. I don't want to see today's high taken out for 2 days. Barring that, if you take out 65.94, the argument could be back to the 64.80 zone. So we'll see if the market can do that. Are the trends in the WTI and the Brent up? They are, unless you take out those swing line lows. So that's what I'll be looking for. Gasoline, outside day down. What's an outside day? You took out Friday's high, Friday's low, you close lower, and in the process, you have lower highs now and a lower low. So the swing line is down. It's balanced because with prices over the 18-day average of closes, the red line, one's fighting the other. So I call that neutral, and momentum is trying to lock and load back to the downside. If it does, I'm going to look for support in this general area of the 100-day average to the 18, certainly the 18 first. In nat gas, up to the upper Bollinger Band. And this is what you call that sideways tight action, not a trend. You've got a higher high, a lower low. You're whipping the traders, and as you tighten in Bollinger Bands, one of the common things that I've seen over my career is that's where you get whipsawed. So when you get this tight, you're looking to see, can the market break out one way or the other? No trend, upside bias, hit upside targets, momentum still pointing up. This terminology is pretty easy to understand, but there's a magazine out there, and it's called Modern Trader, and these are just some of the articles that it has. This is the April edition. I'm waiting for the May. It'll be out any day now, and we'll put it up here so you can see it. But through them, we're able to help you learn trading, words on trading, ideas like trading vertical option spreads. If you don't know anything about it, these are not only great primers, but they'll walk you to the second level. That's very important in a way that you can understand it. And that's what I love about the articles that are written. Bull or bear, this is about the crude oil. What's going on there? This magazine comes out once a month. You receive it via us free. I want to use that word. If you go to their website, you're going to pay $79.95. You also get what you just saw, Market Focus. Now, if you wanted to get the print magazine, they're the place to go. They'll be happy to send it. It's a lot more money because there's postage. You got to print. You got to send it. There's nothing that I see wrong with the email version because it has its own reader and all, and you can print the articles you want. Really simple. How do you get it? It's a $79 value. It's free from us with the cooperation of good people there. Call us. Go right here. You'll see our free offers on our homepage. You can click up here at any time, or underneath us says, click here for Ira's free information. I'm Ira Epstein. You have a good day.